From the University of Westminster, this is The Week Ahead with Dave Coker.
Welcome. It's Sunday, January 31st. This is, of course, The Week Ahead. My name is Dave Coker. Let's take a look at things that may happen in the markets over the next 5 trading days. Key events that you got to pay attention to. Oh, we've had a wild week. I got to tell you, that GameStop thing was really funny. It's really excellent what's going on there. I wouldn't put any money into that stuff, but it's really good to watch. And long-term listeners will know that I generate my money in the markets from dividends. I'm a cash flow investor, sort of a variant on value investing, but I love to watch stuff like this. And I'm not going to take a side, the Redditors versus the hedge funds, although I got to be honest with you. I think there's a lot more going on than a bunch of retail investors at Reddit, and I've been reading Wall Street Bets for years. I think there's more going on than them versus hedge funds. I think there's hedge funds on both sides, and these guys are pushing their own agenda. They're getting a lot of the publicity, so it's very amusing, and it's going to continue. Late Friday, Robinhood added 50 stocks, no fewer than 50 different shares that you can no longer freely buy. They've got trading restrictions, and some of them are as little as 1 share. It's really interesting to watch this. So we're all learning a great deal more about the mechanics of the market. And if you get an opportunity, I put it on FinTech Flash News. Check out Matt Levine's excellent summary of the GameStop. I'm calling it an event. Some people call it a debacle or whatever. Q4 earnings still continuing, guys. We've got big tech and some big health companies coming up this week. So pay attention to that. That potentially could move the market. Oh my gosh, my animation's horrible. Sorry about that. Stimulus discussions back on track. It's not clear, or unlikely, I should say, that Mr. Biden's going to get the full 1.9 trillion he asked for. It seems the number is going to come in a little bit closer to 1 trillion, but pay attention to it. In any case, if these talks break down, it may impact the markets pretty harshly. We're going to talk about valuations a little later. Fed speakers, there's a lot of them coming up this week. I'm going to identify a couple that you want to pay attention to when they're talking. And once again, you'll know what the Fed is going to decide at the next FOMC meeting because you listen to the speakers every week. And finally, January jobs, real important. And I guarantee, guys, next week I will fix my animation. All right, here, let's take a look at how the markets are doing. Now, there is this effect known as the January effect or phenomena. And it's the old adage that as goes the markets, the first 3-4 weeks of January, they will go the entire year. It's a little mixed this year. It's not looking super good, to be honest. Here I've got the Dow, the S&P 500, and the NASDAQ. You can see the NASDAQ is booming, but the other 2 indices have fairly significant falls for a monthly basis, 2% on the Dow, 1% on the S&P 500. We'll have to see if this really manifests this year. I would invite you to take a look at the data. And yeah, I believe in the January effect. Not everybody does, but that's fine. But take a look at it. In terms of the S&P 500, this comes from the wonderful FinViz site. And you can see the S&P 500, it's a real mixed bag here, guys. There's no real winning sector. There's no real losing sector. When you, for instance, on the left-hand side, when you look at tech, Apple's down, Microsoft's up, Intel's up, mixed bag. When you look at communication services, Google up, Facebook down. Look down here in the lower right-hand corner, basic materials, utilities, industrials. Again, mixed bags. And even when we go into the financial lower left-hand corner, we can see Visa down, JPM up, Berkshire down. It's really amazing what's going on here. It's all over the place. So there's no real clear winners or losers so far. We'll have to see what happens over the next couple trading sessions to get an idea of what's going to go on with share prices. But a reasonable question is, how much longer can this continue? Take a look at this. I've got the Russell 2000 index, which is a broad index that measures small cap stocks. And on the white line, and I didn't do this, this comes from Crescat Capital, the white line measures the last price of this index, and the red line is the trailing 12-month earnings per share. So we're seeing prices surge as earnings drop. That means the multiples price to earnings, yeah? That means the multiple is expanding. And how long can it continue? I'm not sure. Unless we start to see a pickup in earnings, it's unlikely we're going to see those prices continue to boom. We may trade sideways, or it may all come crashing down. How long can it continue when we start to take a look at stock market capitalization as a percentage of GDP? Starting from the right-hand side, we've got the present day, And then the big hit to the left of it is, of course, the dot-com bubble. And you can see we're at records right now that exceed the dot-com bubble. And we all know, all students of the market realize how tumultuous that correction was. What about this one? Is it going to be any different? Well, there is an argument that it could be different. I'm certainly not saying it will, but this is not helping. Check this out, guys. Once again, this comes off Bloomberg. And we can see there's a real buying binge. What do you expect about asset prices? In the States, at least, the Fed has nationalized the bond market for all intents and purposes. They were buying stocks for a while. It's really amazing what's going on. And when you take a look at this debt level, the question is, how are they going to pay it back? We'll talk more about that in coming weeks. It's particularly troublesome to myself. Well, it might end by itself, and it might end badly. Take a look at this global government indebtedness, 124%, 23.9 of global GDP. Once again, where is the money going to come from? Now, guys, I've been pretty vocal for a while about, the time for the West is over. We got too much debt. And look at the debt that the emerging markets, the developing economies are carrying, roughly half. And of course, the thing the emerging markets, the developing nations got in their favor is they're relatively young, and they've got fairly decent educated workforces if you look at them as a whole. Not like the West, but there's cohorts that are well educated. They work really hard. They got no debt. What about the West? It's an aging society. And when people get older, they don't buy stuff like they did when they were starting families in their 20s and 30s. And when they don't buy stuff, the economy sort of slows down. Of course, it can retransition, try to sell them different stuff. But, when you approach retirement or enter retirement, you pretty much got all the stuff you want. You've got all the stuff you need. Why are you going to continue to buy stuff? You're not. So these young emerging economies, where the average age is much, much lower than it is in the West, they've got less debt. They're expanding rapidly. And they've got young workforce who will be buying stuff. So keep that in mind, guys. It's a very, very different type of time. And I kind of think it's going to end badly. Monday, February 1st, at 1000 hours, we got ISM manufacturing PMI. And of course, what we're doing when we look at that is we're looking at the activity of purchasing managers in the manufacturing sector. Very simple metric. I'm a dumb farm boy. I love simple things. Basically, if it comes in at 50, it means we're going sideways, number of orders, roughly what it was before. If it comes in above 50, more orders than last time. Comes in less than 50, less orders than last time. It's sort of going sideways. Prior was 60.5. Forecast is to come in at 60. We'll see how this goes. In terms of auctions, we've got 3-month and 6-month T-bill auctions at 11:30 hours on Monday, February 1st. Prior was 8 basis points on the 3-month, 8.5 basis points on the 6-month. What I'm doing here, guys, is I'm putting weekly 3 and 6-month yields up, and you can see something really interesting is going on. We're seeing yields fall. Even as the Fed prints record amounts of debt, the yields fall. Well, think about who's buying that, and that'll tell you a lot about this. On Tuesday, February 2nd, we got ISM New York business conditions. And what we're doing is we're trying to look at what's going on in the New York metropolitan area. One of the bigger areas in terms of contribution to nationwide GDP. And what we're asking here is we're trying to see are things getting better? Are we expanding or are we contracting? Prior was 61.3. We don't have a forecast. At 16:30 hours, we got the API weekly crude oil stock. Prior 7.9 forecast come into 8.1. So we're starting to see the stockpiles expand somewhat. On Wednesday, February 3rd, got 3 things of interest. At 8:15 in the morning, we've got the ADP non-farm employment change. Now, I like to look at private data. Of course, we look at U.S. government data, but here we're looking at ADP. They put out their own metrics based upon paychecks. So we're looking at what's going on with sectors of the economy not related to farms. Prior, we saw 123,000 job contraction. We're forecast to come in at some growth. That will be good. Of course, if there's a miss and if it's significant, watch out. The markets are really, really tight right now, and that could impact in a serious way. We've also got at 1000 hours, we got the ISM non-manufacturing PMI. So once again, what we're doing there is we're looking, and it's also called ISM Services PMI. We're looking at the indicator of how much activity is going on as measured by purchasing managers that are not in the manufacturing area. So simple again, 50 means it's just moving sideways. North of 50, expansion. Less than 50, contraction. Last time we came in at 57.7, forecast to come in at 56.8. And at 1700 hours, Chicago Fed President Evans is speaking. Once again, guys, I really advocate that you develop a habit. Try to read the transcript if you can't watch them live. What you want to do is you want to start to look at these guys when they talk, and you'll know what's going to happen when there's an FOMC meeting. Why? Because you heard the people who are advising the Fed on whether to raise interest rates or lower interest rates or keep them the same. You'll be hearing them for 6 weeks before the actual meeting. I'll always identify those two because I do look at them myself. They're particularly interesting. On Thursday, February 4th, at 0830 hours, initial jobless claims. Prior 847K, 847,000 people in the United States filed their first claim for unemployment. Staggering numbers. Forecast to come in at 830. Again, watch it. If there's a big uptick, there could be a problem in the markets. At 1000 hours, we got factory orders. We're looking month on month for December. And what we're doing is we're trying to look at the change in total value of new purchase orders placed with manufacturers. Prior was a 1% uplift. We're forecast to come in at 0.7%. Watch it. 1400 hours, FOMC member daily speak. FOMC, Fed Open Markets Committee member. He is a voting member. And pay attention to what is said. And again, get the transcript if you can't watch it live. I can rarely watch them live because I'm usually teaching, but I do get the transcripts and I do tend to read through them. I'm going to make a bot to go through the transcripts. That's something I want to do for a while now. All right, Friday, February 5th, got the U.S. unemployment rate for January. Prior was 6.7, forecast to come in at 6.7. Don't really have a good reading on that. And finally, rounding out the week at 0830 hours, we got the participation rate, the labor force participation rate. Prior was 61.5. We don't have a forecast now. This is really important, guys, because what we're doing is we're looking of all the people that could work in the States, how many are working? And this has been falling for quite a while until we saw the Trump rally and it was picking up, and now it collapsed. And we all know the reason, the unpopular virus. All right, guys, this has been the week ahead for January 31st, 2020. I hope you have a safe and profitable week. Once again, start to look at the markets, start to look at the sectors you're interested in, the assets you want to own or you do own, and come up with your own week ahead. Try to develop a sense for what news might change the markets in the asset classes that you're interested in. Have a profitable week, guys. I'm going to be making money. In fact, I'm positively minting it these days. You can too. Take care.